Welcome to Subramani. When I was seeing the Money Life Foundation awards for corporate governance, one thing which came out is one of the promoters said when I went to a mutual fund and I said I will be losing money for the next 3 years. They said no, I am looking at quarter on quarter results and I'm not really bothered about if you want to lose money over the next 3 years. I'm not the right person. So he says, so I walked out of the meeting. We laughed and we walked out of the meeting. I think promoters also have to understand about certain things about why investors invest. One, there could be a venture capitalist who is willing to take a 5 to 7 year view on a company. Right. So when we are talking of 7-year view, we are talking about 28 quarters. And there could be somebody like a family office, which is say a good quality shareholder, who is willing to say, okay, I will come, I will invest. I do not know what long period I am looking at, but yes, I am willing to look at 3-4 years of whatever you are saying of losing money, etc. And by the time when the market delivers, market recognizes you and improves the PE, that is the time when I will look what to do. Will I exit? I don't know, because taking a 20-year view on an investment is very nice. It is in theory, but it does not happen practically. Assuming that you are a good quality shareholder also, you will want to do a review and then decide whether to be in that share or not be in that share on a regular basis. Why would you not look at a good company but say, okay, I think now it is fully priced, let me sell, let me come back. Perfectly possible that if you are a good quality shareholder, you will do that. It is also possible that you are a good quality shareholder and you will not do that. So as a startup entrepreneur, you should know which shareholder wants what. You cannot expect every shareholder to come with you and stay with you, because the shareholder is also looking at competitive returns. Like for example, I know many people who sold Infosys and bought TCS. It is not that what they did was right or wrong. It's a question of they had to reallocate, because when such a big company like TCS was coming out with an IPO, they could not say, I will not allocate money to TCS. You had to allocate. This was about 10-11 years back. So the money had to come out of the technology budget that they had. So if say 20% of my portfolio is technology and it is fully occupied by Infosys, assuming there are only 2 companies, then I would have to sell a part of Infosys to invest in TCS. Nothing wrong. It's not a vote saying Infosys is bad management or Infosys does not have great prospects ahead, but I have to allocate something to a guy who's got so much of market cap. So I had no choice but to sell Infosys to buy TCS. True for many institutional shareholders. That set me thinking, and I said, when investors look for top quality companies, do companies also look for top quality shareholders? And what would be a good quality shareholder? Is there some definition of a good quality shareholder? So I had to go back to see some studies. Obviously in the US, not enough studies have been done in India. And I realized a top quality shareholder, how I would also like to define a top quality shareholder, is he has to have a reasonable stake. We are not talking of a person holding 100 shares or something like that. A reasonable stake, maybe 0.5% in a company or 1% in a company. Or if it's a very, very big company, then say 100,000 shares or 200,000 shares or 500,000, something like that, some number. You put a number to it. Maybe it is worth 10 crores, maybe it is worth 15 crores, some substantial number. Should have held it for a very long period of time and should have applied his mind on it on a regular basis. It can't be just an inheritor who got it from his father and or his mother, and then he did not bother to look at it for 20 years. It may have made money for him, but I would not call him a quality shareholder because he has not paid any attention to it. I'm assuming he has not paid any attention to it. If he has paid attention, if he has seen the balance sheets, if he had asked some questions, then I would put him as a quality shareholder. So a participating quality shareholder would have all these features, right? So meaningful position on a long term basis. So let us say in India the cutoff should be 5 years or 7 years or 10 years or something like that. Each company should take its own call. How long have been they there? What made them buy it? Why are they still there? What do they look for on a regular basis? Or do they look at quarterly result? Do they look at the management discussion and analysis? Do they ask the company for some additional information which is not generally available to the Aam Aadmi, general public, right? So looking for all this. So have these guys or have these people who are investors, have they impacted the performance, or have the performance impacted them, right? It could be mutual, right? So I found that we have not done any great research. So I spoke to some of the people who have invested in India for long periods of time. That luckily I have, but they may not be so big. So what did they want? They wanted clear philosophy of what the company is doing. Right, they have clarity, like Colgate toothpaste, right? That's it. They don't want a very confusing company, or they have complete loyalty to the name, like Reliance Industries. Most of the people I spoke to, sorry, but there is a Gujarati bias in the number of people that I spoke with. Most of them were Gujaratis. Total allegiance to a Reliance, so they will never sell it, or even if they sell it, they will buy it back. They have total dedication, I would say, to Reliance, to HDFC, Deepak Parekh. That kind of loyalty which they don't have to some other companies, right? So clear philosophy, what the company is doing, they know that, oh, this is housing finance. Though I don't look at HDFC as a housing finance company, I look at it as the Berkshire Hathaway of India, right? It has created so many new companies, and today it has a 10% stake in Bandhan Bank and a 10% stake in Yes Bank. I'm sure they'll sell it going forward, but as of now it is there in their portfolio. It is not just HDFC Bank 10% which they hold these two also, right? So I think they are also, they did not articulate it so much, but I think they are looking for a mission statement, reasonably good communication whenever things go wrong. Many of them were holding Nestle, and it didn't bother them that they have a problem. They're holding Colgate, they're holding Lever. I don't think they look for any mission statement or anything, but they just say, okay, if the company earns so much, they give us so much. So I think the dividend payout philosophy is very important, especially because these are all small shareholders. I don't think any of these people held more than 50,000 shares or 75,000 shares. So not really the mega shareholders, but not the retail guy also. So, and obviously they looked at the brand strength, they looked at whether they are consuming the product, which happens in consumer products, or like I said, complete loyalty. Mukesh Ambani is there, so he will do a good job. I don't think they have a very clear view on what will happen after Mukesh Ambani. They didn't bother. They said, no, it's a good company, we will hold on to it, right? Then I found them holding on to MNCs more than Indian share. Then again, the Tata Group has a good name, so they said, oh, it's Tata Power, my father bought it, so I'm still holding. There's no great reason why they held it, but they were holding it for a very long period of time. One of the reasons, I think, is the regular dividend payment. If the company skips dividend, then they start getting a little skeptical. Many of them were a little skeptical about Tata Motors. They didn't understand what is happening in JLR. They didn't understand what is happening in EV. But the Tata name held it for them. So because it was a Tata Motors, they held it. It was some XYZ Motors. They may not have held it for such a long period of time. They were, of course, looking for good returns. There's no doubt about that. They were looking at dividend. Many of them had employed people who were looking at and calculating the return. So that was happening. I don't think any of these people even had heard the word ESG, but they did not want the company to get into any controversy. Like many of them said, oh, but Franklin Templeton, there was a problem. They had no clue what was the problem. They did not know when the problem started, what happened, that the money has been returned, not returned. They had no clue. But they just held on that there is a problem. So it should be free of controversies. That's very important. May not do something great, may not do charity or things like that, but at least don't get into trouble, don't get into controversy. This is very important, because when they see they're very clear that if they see too much in the media, they're not very comfortable. So if they see something with a negative thing, I think even if they see the MD on page 3, they might panic. So if the promoter is 65-year-old, his son should be careful about not being visible in the wrong places or getting caught for the wrong things, right? So these people are very finicky about that also. And They don't interact with the company. They don't write to them. They don't attend AGMs. Many of them don't even know when the AGM is. So I asked some of them what really attracted them to invest in such companies. So first was companies having a big moat. None of these people believe that Patanjali or anybody can make great inroads into Colgate's share on toothpaste, right? So of course they are saying small dents will be created in small pockets, but the overall growth will remain. So this could be true for a Maruti in terms of market share. People can talk about EV, Tata Motors becoming a big player in EV, which is true. Tata Motors as of now has become the second largest car passenger vehicle company. It's overtaken Hyundai. But will Tata Motors be able to catch up with Maruti? Long journey, right? Similarly for say an Indigo, 62% market share, 65% market share. Will the Tatas coming in with Air Asia and Air India and all the airlines that they have, Vistara, sorry, will they combine, will they come out with a strategy? Maybe, but will they be able to threaten Indigo? I don't know. So many of these people would not be touching Indigo as long as Indigo does not pay dividend. For them, it's very important that the company has an earning which is growing and the company is able to pay dividend, which means it has to be almost debt free, at least tremendously less in debt, so that they start getting dividends. I think the one thing which they were very clear is they would not like diversification, right? Getting into too many things. Many of them had Larsen and Toubro, but they did not have too much respect for Larsen and Toubro's diversification. That I spoke to them. Some of them would not touch an ITC because of the cancer-related stuff, and some of them would not touch an ITC because of the diversification. Again, they are not very sure about whether the FMCG etc. will make money. They like long letters, but I doubt whether they really read it or whether somebody made a summary and gave it to them. I found 2-3 of them willing to spend money of say 50,000 rupees or a lakh of rupees to buy a research report on these companies, but largely they were not too much worried because they were looking at saying, oh, last 10 years this is what they have done, I think they will do well. They were not very clear as to what the company will do in the future. They didn't know, but they didn't bother. They were very happy with the quality of management that they had. But they were all very particular that the company is not excessively dependent on the family. So they liked a family-run company with a broad shareholder and a broad board of directors. So they were very particular that the company be run by professionals but owned by families. This is very good learning for me also, right? Then they were looking at return of capital. There is absolute return on capital and return of capital. They were very clear. They also needed liquidity. Like in case of an emergency, we should be able to sell. But none of them had ever sold it in an emergency, and none of them had ever communicated with the management about what to do. They were all very particular that the capital allocation is done properly, and too much money should not be going into projects which are not giving returns. They were very particular about that. They would be hassled by something like this, and they were also very particular that they don't get a bad name. Like I said, no page 3. Similarly, no question of corporate governance or income tax or excise or GST or anything, nothing negative. I don't think any of them were looking for great quality management. They were looking very, very non-negatively, saying controversy nahi hona chahiye rather than nahi hona chahiye. That led me to question that why don't companies do this? I think the shareholder or the quality shareholder has a much longer term view on the company than the current managing director. The current managing director does not come with a mandate that he has to create shareholder value. ठीक है, कर दिया. Anyway, if there is a family, the family pushes for value creation. But if he's not, the CEO is not really too much bothered about that. He is more on a quarter-on-quarter guy, and he comes for 3 years, 5 years, maximum say 6 years. They don't last too long unless he or she is from the family. So of course, companies like HDFC or Supreme or many of those Murugappa group companies, Sundaram and all of them, have had CEOs with very long tenure, but they were not really too much bothered about the tenure unless they were worried about something, that if this man goes, has he created a good number 2 or number 3, has he created a good system? Those were the things which were worrying them. But this is my take on quality shareholders. I don't think the current management in India is doing enough to address them, and I think that's a great opportunity for marketing communication people, investment professionals, investment PR agencies, etc. Thank you. Bye.